What's happening, guys? Today is March 21st. We are into spring here in New England. It is going to be 65 degrees today, so I am excited to get out there and enjoy the weather. First and foremost, phenomenal job on leaving comments last week. Great key takeaways. You guys are really getting it as far as putting the timestamp. It allows us to click and go right back to what that aha moment or that key takeaway was. And I've got a guy, Damien, helping me out, who is going through and pulling those out, putting them on an Instagram. We're compiling them. We're making a nice little database of these key takeaways from you guys. And it's super helpful, but not only because you're doing it, you're going to be able to help somebody else. Somebody else that's like, oh, I needed to hear that, or that was a big key takeaway for me, might be for them. So, you're not just helping us, but you might be helping, somebody else. So I appreciate you guys taking the time to do that. And as always, if you don't mind, like the video, it helps us. Let's see. T-shirt. Quit routine, living our dream. I had to really focus in on that. It was all like one long word. But you've got the T-shirt for this week, and let's get right into it. So last week we had SLGG. Fantastic swing trade. Great idea on Sunday scan last week. Dips were the goal. If it firmed up at 7, I was thinking that it could potentially do a 10 to 12, potential 12 to 15 if it really starts to build over the next week or so. We did that first batch. We got into that 10 to 12 range. So I made it to mid-low 9s, and high 9s the day before. Thursday I sold about 75%. Friday I sold the others a little bit too soon. I rebought a little bit, but no more than 10% of what I had. I had some size. I was trying to let it work, and as you guys know, if you were involved, you saw it was a lot of nice upside, and then they'd wind it back down, and then right back up, and then does it again, pulls it back $1.50, right back up. And that starts to take a toll, especially if you have some size. So, I did what I could. I was as patient as I could. And, I thought I did fairly well for, making it through. But just always has that tendency to do the easier upticks right after you get out of your size, right? So, I'm less upset about missing that upside than had I overstayed. It gets incredibly annoying to be up huge and then just, kind of slowly watch it all go back away. And so for me, locking in that gain, taking that gain and actually, getting it was more meaningful than, the fact that I missed out on a little bit more upside. It was still a good trade. Yeah, it could have been better, but, that's trading. You're never going to get it 100%, and, you can never master it, which is the good part about trading, but also the frustrating part. Last week, we talked about NFTs, which still, it's way over my head. Cody did a great webinar on it, so anybody that's a member, just click Cody's webinar, and you can get kind of the what the heck are these, kind of review, as well as, some opinions and kind of what he's done in the space, and, he's done pretty well with it, and he was on this thing like 2 years ago before it even was a thing, so it's pretty interesting. But for me, I'm not necessarily participating in the actual NFT element as far as, going out there and buying virtual real estate or artwork or any of that kind of stuff. It's just not me for now anyway. Sounds like when I was like, I'm just going to wait for the dip on Bitcoin at 19,000 and then I end up missing it. So, but the point here is how as traders do we make money on them? And last week I went over and I had OCG, YVR, Kodak, and quickly TCAT became, a main watch on Monday from Friday, Thursday, Friday, Monday. But, it quickly became part of the mix. We had ZKIN as well as a few others. But just understanding that NFTs were really picking up steam and really becoming a thing, and people are starting to get interested in them. Because of that, and mad props to Cody, because of, him saying, hey, this is a thing to care about. I was super prepared, as you guys were if you watched Sunday Scan, and you saw what happened to those stocks. I mean, OCG doubled, YVR doubled, TCAT went, crazy. I mean, it went from 4 to 40, 1,000%. Didn't make it that far for sure. I made it to about 15. I got size at about 6, 7. Once I kind of felt like this is gonna go. It's one thing to just have size and it works out, but it's really about, for me, seeing liquidity, seeing volume, seeing the action, seeing the momentum, and then being able to sink your teeth in more. And so for me, that was $6, $7, $8. I made it to about 10 to 12, or I think 10 and then 15 on the rest. But 15, I only had probably about a quarter of my size left. Most of it left in 10. Yeah, then it went to 40. The normal story. But OCG got a great portion of that. But on top of that, they offered great fade opportunities as well. So just by being prepared and knowing that these things mattered, I got the upside and part of the downside. And we've still got a lot of action, next week to take advantage of, in my opinion. One thing that I noted in the room was Kodak. First off, Kodak had an earnings report, so everybody was aware of that. For me, that's never something that I would want to be sized into, or at least risk much into. But either way, there was obvious relative weakness versus the peers. So all these other ones were trending up, and Kodak's kind of like, yeah, no, that's okay. I'm just going to go this way. And so I noted that to make sure, like, hey, there's obvious relative weakness here. So for me as a trader, I don't want to be in a name that has relative weakness. If it plays catch up and it comes back, then great. I'm interested. But I want to be part of the ones that are working. And the ones that are working, the ones that are trending, the ones that are, over key levels, VWAP, whatever it may be, most people are on the right side of those names, or at least shorts are on the wrong side. Whereas on Kodak, if it's failing to follow through and under support levels, you're competing, right? You're competing with pop sellers if you're on the long side. So for me, it's an avoid. Made it pretty clear. And, not that it really pulled back that much, but why was I interested in the other ones versus something like Kodak? And that was, the reason for that. So, we're going to have some good stuff this week. And for me, understanding kind of how they fuel each other, right? So you watch OCG and it starts to fuel TKAT and so on and so forth. But then on Friday, ZKIN became the new hot stock, and a ton of volume went nuts. And so it was worth watching that, because if you did, it gave you a little heads up on what TCAT and OCG did. So typically I watch the basket of names, and one might start to fuel the other one. So ZKIN starts to take off, you start to see OCG and TKAT take up, uptick. So that was a great way to kind of use it as an index, right? So just like GME, I always look at the index of names: GME, KOSS, AMC, BB, BBBY, you name it. When GME is going nuts, all those ones are kind of just following suit. So that is a key way in which I try to get an edge. We had some great failed follow-through momentum on ZKIN as well as OCG. So great plans on those on Friday. Friday was phenomenal off the open. Good stuff during the day, and then I wanted to kind of like take my foot off the gas and hands off. So I did a midday open mic session. So anybody that is an IU member, go check out the webinars, and you can see we did about an hour and 20 minutes or so, I think, of just Q&A, members asking stuff real time during the market. During the market hours, you could kind of see stuff. We were talking about certain situations, stuff moves, things like that. So, and likewise with the broadcast every single morning, that's where I go through a lot of the game plans. So if you're in the room but you're not logging into broadcast, you miss a lot. So that only takes about 10, 15 minutes, and it's just basically, we go from this to this. Right. And so we go from this huge, macro focus to, okay, what are the 2-3 main watches and what would create a good trade? And so SPCB, I would encourage anybody that's in the room to go back and rewatch that. But we were talking about 310 being a key level. So the hard part about right now with all this volume and this pre-market action is the obvious, despite being obvious, is not always the easiest, right? Because if it's so obvious, then everybody's going to be on the same page. So you have to kind of take notes, right? There's no problem with being in, on the front side of a move if you are in a starter position, a feeler position. The problem is people put on their entry and they call it a starter, they call it a feeler, but it's not. And so you need to be truthful with yourself, like, okay, what would my size be on this trade if, XYZ happened? And so I'll give you an example. So something like SPCB, just for simplicity, I'll use round numbers. So on the front side of the trade, if I wanted to get into a 100,000 share position, I might put on 5, starts to kind of work, another 5. I might go to, as a max, 15,000 shares on the front side of the trade. Whereas I want to be at 100. So I am in 15% of my position. I'm not in a half. I'm not in 3/4. I'm not in, any large size. I am comfortable with it ripping, in this case, where 310 tested a bunch of times, I'm comfortable with it ripping through to 350, 370, because that's what you have to be okay with. Otherwise, you should not trade the front side of the move. You should wait for the next key level, which, as we discussed, was 280s. So if you have poor risk management, if you find yourself on the front side of the move often with too much size, getting squeezed out, fighting the trend, and ENTX, XELA, EYES, if you were on that front side and you were like, oh, I did it again, I have too much size, I'm adding, I shouldn't be in this trade. And like we talked about, if you were uncomfortable, right, you should be comfortable in the trade. If you are uncomfortable, then you should not be trading the front side of the move. But for me, I like to get in there. Sometimes it's even less. I like to get in there and get a read on things. I have to be involved in the trade to get as good of a read as I typically do on particular names. If I'm not, then I don't size as much and I don't get in there and get that confidence based on being in there. That may not work. That may not make sense for a lot of people. But for me, that's what works. But I also have good risk management on the front side of the trade. So, SPCB, 310, fail, 310, fail. They break it a few times. So sometimes it creates that ceiling, but then they pull the ceiling, right? They let the roof off. Everybody freaks out that was short. They get squeezed out. They're just sitting maybe 5-10 cents higher. Everybody that is a FOMO chaser, like, oh yeah, we're breaking out, we're going to 350, we're going to 4, they come in. So it becomes a liquidity event, right? So everybody buys for the breakout. Everybody that was short, who is, in this case, 50,000 shares short, 70,000 shares short, right? They're 50, 70% of their where they want to be. They're freaking out because they're outsized. They're oversized for that particular trade. They freak out, they swipe out, they cover into that 314, 318, whatever it may be. You see that huge volume and then bam, right back under 310. So they're just taking advantage of everybody that is doing the obvious. The obvious is 310 was the top. And when they make it obvious and they pull that roof off, they're taking advantage of you. But you don't know, is it just going to go to 318 or 350? So yeah, 318 becomes a great cover because you don't know. So the point here is that I never want to be emotionally involved with a name if it's like that until either they blow everybody out, some type of either parabolic move or some huge stuff where everybody gets on the wrong side of the trade, and then you start to see it fade off. And you look at where the volume was, and most of the volume is much higher than where it is now. So what that tells me is that most dip buyers are now going to become pop sellers like we talk about. So The last note with that is anybody that's new, just like I talk about in the room every single day, 9:30 to 9:35 on these types of names, I mean, it's a circus. It's a circus. You could be right, you could be wrong. Right, wrong, right, wrong. And then things start to kind of, chill out a little bit. So if you're making good trades off the open, great. But you're one candle away from a bad trade. So if you're new, just be aware of that. And I think WKEY, I put out a tweet this weekend showing the chart, where I started in and I waited for the key level. And I do that in the room. And I write out the key levels, where I need to see fail. Old me used to, it starts to come in. I'm like, all right, I'm going to add. And then swipes up. All right, starting to come in. I'm going to add some more. Swipes up. All of a sudden, you are now in 20, 50, 70% of your position on the front side of the move, which means all of your emotions are front and center on the front side of the move. It starts to go, you get squeezed out, comes back in, right? So as you saw with WKEY, I will take a small starter, get a feel for it, zone in, and wait for those levels to break. If not, avoid. And just because they break does not mean, yes, it's a short. I want to see him fail. Break, come back, confirm. Break, come back, confirm, lower high, failed follow through, stuff, whatever. Combine it all together. The more things that happen that are negative, the better chance that there is it's going to fail. Let's see. Patience equals money. I forget what point I was going to make with that, but I think it's related to, actually, I remember now. For me, I used to be, very aggressive off the open. And, the last probably, I would say 3 weeks or so, hands off. Hands off the open. Yeah, I am trading off the open, don't get me wrong. But I'm not trying, so for example, an SPCB or SENS or whatever that one was on Friday, the big names, I'm not trying to figure it out on size right out of the open. Because when you have a 50, 80, 200% move, whatever, there's a lot of meat, right? So you don't need to get this out of the open and size in. My goal is to get size and then get this. Not this, this. So for me, I'm going to be patient. I will be in there and get in there, but I don't want any emotional attachment right off the open. You got to treat pre-market a little bit different than the regular market. So for me, it's, if I take a trade 6 a.m., 7 a.m. to 8 a.m. or whatever it may be, I'm treating that differently because a lot of times you see these stocks come in, which is the trap in itself, go under VWAP, come back, consolidate, and go, right? Their whole goal is to create this volume, create this weakness, create this appearance that this thing is going down. And then guess what? You're shorting the pop, you're adding, and then they squeeze you out of the open. So just like I said last week, doing the same thing over and over and over and expecting different results. If you don't see that trend right now, then you're being silly. CLVS, fantastic, understanding volume, following the trend, trusting. One thing that I said I wanted to do a little bit better was trusting some of this volume. And it's difficult for me to trust volume at times when I start to have this preconceived idea like, oh, this is going to unwind, blah, blah, blah. I think I did a pretty good job with CLVS. I posted the chart on Friday, and I think it worked out pretty well. And that is one thing that you need to understand right now is, how is it trading versus prior days? And what is it tracking for? Is it tracking for 50 million and that's just another day? Or is it tracking for 300 million and we could have an outlier day? The volume, the price, and key levels on the daily chart is what gives you those hints as to what has potential for an outlier day. And the outlier days is where we make the most money. Last but not least, and I'll go through some rapid fire questions from Twitter. One thing I was going to leave you guys with something to maybe try this week is hotkeys. So I don't talk about them a lot. I added them about 2 years ago, and I will never go back. Personally, I like to point and click at my level 2. That'll fill in the price, and then I can hit certain key levels, whether I want 500, 1,000, 5,000, 10,000, 20,000, whatever it may be. But that's all one click away, and it's fast. It's faster than me typing it in. So a lot of people are like, it's too much. I don't get it. Try it. See what you think. Dash Trader has some unbelievable options. You can pretty much do anything you want. Same thing with cancel all orders. Sometimes you've got some orders in there and the trend changes. You're like, oh boy, one button, they're gone. So anyway, I asked a couple people, or I asked Twitter, what you guys would like to hear about on the video this week. So first and foremost, your swings do great. I know you use volume as a key indicator. I would love to hear exactly what triggers it has that look in the tape for you, as many of my watches for continuations based on very high volume are usually yawn. So it sounds like typically, you get into a trade and it's just kind of like la-di-da. For me, I want to be continually proven right. So I want to see this breakout trade. I want high volume on the daily chart, and then I want a period of consolidation. And then each day, if it continues to dip and come back, then to me, that gives me confidence that there is a buyer in the tape. And the reason for that I like that is, if you think about, even for me, right? So I had a bunch of SLGG. It had a very, the longevity of the move. It lasted a lot longer, and then it thinned up. And it didn't do that until it worked people out of size a bunch of times, right? So it went up, came in. Came back up, went in. And when you go straight up, that's great. You can get a nice little squeeze. But it's short term. Like it's going to squeeze out, and then it's going to sit back, and that's it. What I look for is that continual kind of go up and retest, consolidate, ramp up, consolidate. That's working out size along the way, and therefore it can support a much longer term move in my eyes. So that's something that I look for. I look for stuff that has had huge candles in the past. I look for stuff that has a good sector or a theme that's currently kind of hot, and things like that. So hope that answers your question. But there's always different sectors and themes that are heating up. So if it kind of fits the ticket, GMBL, AES, AESE, SLGG, the more that are running in that sector, the better the ability of a potential breakout, continuation, because it no longer becomes just one little Momo trade. It becomes this sector move. And as you guys know, when sector moves happen, just like NFTs this week, things happen. So next one was from Beryl. And how to best navigate choppy markets. Feel like you've been covering this in scans. A bit curious how you adjusted size, etc. during periods of 2015, 2016. So, it's. I think the easiest way is to, not try to figure it out. Don't try to call the markets every single day. There are periods of time when there's edge, and that's when it's panic mode. That's when it's breakout mode. But if you're always trying to figure out in between the chop, when is going to be the next big unwind? When's going to be the next big squeeze? Then you're going to get chopped up. So for me, I wait for things to kind of break out of channels, break out of trends. I start to rotate around to different trades, different names. I'm not always going to trade the same thing. Last week or the week before, you saw me trade a lot of TQQQ, market-related names, NEO, and AAL, and anything that was pretty much related, plug, FCEL, all the retail crowded SPAC names, CCIV, you name it, right? They all were kind of coming in and just completely unwinding. But I took that trade, I moved on, they're off radar until the next time that they set up. So you take the outlier range, and as they tighten up, you move on, for me. And that helps me stay out, just like Riot right now. Riot had that huge move, huge rebound, and now we're in this consolidation period. So more often than not, you're going to get chopped. But if it breaks out of that consolidation period, then I go back for it. But as far as 2015, 2016, I don't really remember how I adjusted size. I know that I missed a lot of the shorts and the good opportunities. It was a great time. There was a lot of stuff, but I wasn't as aggressive as I am now as a trader. So, I definitely think there were periods of time that I learned that you don't want to underestimate the bear market rally, which, as I said, obviously by definition, we did not have a bear market a couple weeks ago, but same deal, overextension to the downside, and do not underestimate what it can do on the upside. And I think last time we had that market downturn, I did a little bit of that where, I nailed a short and then, it rebounds and it's like, it can't rebound this much this fast, can it? So you start to short and then, it can keep on going. So I think that's why I was able to kind of warn and suggest, to be careful with that type of situation this week. Would love to hear your thoughts on the current market conditions moving forward. Powell, this and that, et cetera, et cetera, et cetera. So I put this one on there just because, and no offense to you, Kevin, but like, I don't care. I don't care what the market's going to do. I don't care, what Powell says or this or that, because we can't change any of it. And so what we just have to do is hope for market volatility and action. And, think about all the people that are always sitting there, the market's overextended, the market's this, market's that, how much did they miss? How much opportunity did they miss? So for me to kind of carry a huge opinion on what should happen, as you can see, it's been proving everybody wrong. So I think for us as traders, it's a waste of time to really carry a strong opinion one way or the other, because I think that, I think it's fine to have an opinion, but I think that if you have too strong of an opinion, it's going to hold you back. And, for me, I like to be unbiased. I like to come in, I love to short. Yeah. But I short big outlier opportunities. It's not because I think that, the stock is overextended and it's going to fade, for the next 6 months. It's because I feel like it's overextended for the short term. There is a short-term opportunity to take advantage of, and then I move on. And so that's how I treat the market. So I try not to get involved with, too many thoughts. Last two, at what percentage do you take profits? And when is being greedy? So for, it's different for a lot of people. Like I say in the room, every time that there's a huge move, OCG, TKAT, we're both massive trades in the room, as well as SLGG pretty much being a double. And, at 30 to 50%, I was reminding, traders, look, if you are in account building mode, right, then I think it's important to go ahead and lock in. And what I think account building mode is getting away from pattern day trade rule, building that padding. Once you have that padding, you no longer have to build, right? You're not in build mode. So you become more of a, you're letting this trade work and letting that trade work and letting these big picture ideas work. However, when you're new, there's nothing worse than being up huge and watching it go all the way back. So I'd rather see people that are trying to make this work compound their gains, lock in, build their accounts, rather than see their accounts go up and then, I should have locked in. Go up, I should have locked in. I'd rather see this, locks them in, and then it comes back a little bit. See this, comes back in a little bit, and each time there's a higher low. So I don't think there's really a percentage, and I don't think it's really about being greedy, but I think if you went into a trade, you had a plan, and it did what you did, or it did what you wanted, then you should be out, let's just say 75%, right? Because you expected it to do this. It did it. So why are you trying to get more? Why are you still there when it did exactly what you thought? So it's fine to let that winner work, but if it did exactly what you want, locks them in. And last but not least, is Beckett's diet purely kibble-based or also natural foods? He uses just food for dogs. It's kind of expensive. I think Laura spends more on Beckett's food than I do in a week. But great question, Jeff. Anyway, let's get right into it. And next segment will be what I am looking for in the week ahead, thoughts, and we'll see you in a minute. All right, guys. So first and foremost, as always, got to disclose, we are not an investment advisor. We do not give buy or sell recommendations. This is educational and informational purposes only. And my goal is to kind of share what's in my head, what I'm looking for, what I'm ideally looking to do if particular situations happen. Hopefully that makes sense to you, and hopefully you're able to see the same trade yourself. If you have any questions, as always, you know the drill. Ask them in the comment section. Email cam@investorsunderground.com. Once again, we are having our sale this week, and if you are interested in coming on board, now is the time, as prices are the cheapest that they've been in quite some time, and at some point in the near future, we'll probably be adjusting those to reflect, you know, everything that we've added in the last year. We haven't really changed anything price-wise, but all we've done is continually add on new features. So let's get right into it. And first and foremost is CLVS. You know, this one I'm going to be watching. This was a fantastic trade. I have a small position on the long side that I just bought into the dip, into the close. Nothing that I am too, you know, aggressively excited about or anything like that. I just had a phenomenal day on it on Friday. So I went ahead and replaced my exit at the close, but only a percentage of it. So just in case we gapped up, we have, you know, have an 820, 850. It's a starting point. That way I can maybe double up, add more if it continues to go. If it doesn't, no big deal. But great opportunity. Like I was talking about in the first part of this scan, you know, understanding volume, understanding opportunity. Typically this trade would never do that, but I saw the volume tracking for, you know, 300 million, 350 million. That tells you, hey, treat it differently today. So for me, I'd be looking at a couple key levels. I think that if we draw a couple lines on here just to make it a little bit simple, you can see that the 750 is probably going to be a big psychological level, and then, you know, something like 8. You can see that it's stuck in that channel there midday. So for me, I would not want to be aggressively adding or assuming that it's going to continue higher or break unless 8 started to base. And, you know, obviously the next level there would be probably that 820, 830 level, where it could open back up and get back up towards the 9s. Otherwise, if it has a weak open and it has trouble with the 750s, I would be cautious. This is a trade that I could come back to Tuesday or Wednesday, you know, kind of review it. 350 million volume, might have that nice T+2 type of squeeze opportunity. So Riot, like I was also talking about, you know, there's a great opportunity here. I do think that we will have another nice trade. You can see that it's been having a little bit of trouble in the mid 60s or so, but Bitcoin's been pretty steady. You know, it's kind of broken out and then comes back in, and it's pretty stable at the moment. So if you try to get too aggressive on this thing and Bitcoin just does what Bitcoin's been doing, then you're going to get chopped up. So for me, I look at, you know, situations like this, and just like I said in the room on Friday, 6350s is sort of that top. You know, it's pretty obvious. And if you want to participate in something like that, then I would be cautious with oversizing, and I would just kind of focus on that level as your risk. Otherwise, you're going to probably scale in and get chopped up. And, you know, like for me, I had a nice, you know, flush out, but I didn't take it off. So it came right back up to my entry, and then I ended up taking it off. My goal wasn't to scalp it. My goal was a big picture just in case Bitcoin decided to take a little bit of a break. Keep in mind, Bitcoin is not 3,000 anymore or 10,000. So a 300 to 500 point move is nothing, right? And I see a lot of people mentioning, oh, you know, big pull on Bitcoin, and it's $300. But it's now 60,000 just about, right? So that's not a big move. The moves that I'm interested to give us edge on something like this is 1,000, 2,000, 3,000, you know, some big outlier moves, or just the general trend. So, you know, if Bitcoin's 58, 57, 56 slowly, then we're going to have a slow bleed out on Riot. But if intraday, you're trying to figure out what way it's going to go, and you're making decisions based off 300-point moves on Bitcoin, you will likely lose, likely get chopped up. If you make money, you shouldn't have. You can see that we're pretty much flat at 60. If you're looking at the daily, you can see that's sort of like the overall level that it's been kind of basing at right over here. So for an outlier move, 65 and probably 56, under those levels. So call it 65, 55. Otherwise, assume it's going to be, doing a little of that. But I keep it on watch because I've had good success with it. I want to be there. If Bitcoin decides to break out, then I have no problem going long. It's a little harder for me on this particular name, but there's been some great trades both ways. OCG, I think that if NFT gets a little bit more traction the rest of the week, we're gonna have opportunities on this one, TKAT and YVR, ZKIN. But I think that we're gonna go into a period of kind of just relaxation on it. I feel like a little bit happened too much too soon. I feel like it's a little silly. I think that people need to understand it a little bit more before you start to see real holders, real size come into these things and actually soak it up. I think that the last week was a lot of just, FOMO. I don't understand it, but I know I want to be involved. I want a piece. Oh my gosh, this thing's going 1,000%, blah, blah, blah. So be cautious. A lot of them are not even NFTs. They haven't even mentioned it, but they all get thrown in the same basket as potentials. And, that's fine because that's what creates the trading opportunity. The people that are saying there's nothing here that are shorting it, but then the demand that's greater and squeezing them out. And then the ones that are part of it, but you've also got stuff like WKEY, which literally puts out a daily PR every single day. Not every day, but like more than half of the days. And they take advantage of this and very suspect. The intent there is clear. They want to get their stock price up. They want volume, you name it. So, whether or not this turns into a problem for them, who knows? But, very kind of sketchy move by them, but it worked. Stock went to 16. But I would not be surprised to see this continue to fade off if the sector in itself continues to stay cool. So higher the better, though. I'd love to see OCG continue to go. But, I'm prepared and waiting for, potential fade. So I'm going to be ready for that fade. It was a nice fade on Friday. I think we're going to have to watch TCAT and OCG to kind of get a good feel for it, and ZKIN. ZKIN gave everything a second boost. You can see that this one was a little bit stronger than the rest, had that midday push and squeeze out before it finally gave it up. But this gave a little bit of juice to TCAT intraday as well as OCG intraday when it started to go. And that's what I'm talking about, different names within that basket fueling each other. So for now, we got to see what happens. Are we going to gap up on Monday? Are we going to gap down on Monday? Even if it gaps down on OCG, I'm still interested because this came from, $5, maybe even lower. Yeah, about $5. So, I'm not looking to ride it back down to $5, but if we start to fail a couple times in the mid 11s, a buck or two is a fantastic trade. JFIN, this one, I want to assume it's going to fail. I don't want to get too bullish here, but there is that possibility that they might have set a very, 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 very big trap, let everybody win on Friday, and just feel good about it. What did we have? We had 7 million shares on Friday compared to 138. So, in the event this ends up either having a PR or holding trend, this could easily reclaim and get going again. And so, again, I want to assume that that is not the case because, anytime you're like, all right, squeeze is coming, you always end up holding the bag, right? You need to be proven correct. You want to see this thing continue to base and continue to prove. So the key levels for me is probably going to be over this 830 mark. For me to get excited about a potential squeeze on this in the coming days, it's got to be over 830s, 850s. It's got to be holding trend. I would probably use 780s, 8 as risk, and then see if we get that nice little breakout. And the only time that it would probably open up is if it gets over the 9 level. And you can see that, it is a pretty wild mover when it wants to. But I think a lot of people got bagged. But that does not mean that it can't go. These China names are sneaky sometimes, and they set that trap. They let everybody feel good about the short, and then all of a sudden it's like, uh-oh, I should have covered. And then they start to add, and it starts to compound. So again, I'm happy to fade this tomorrow morning if the trend continues to fail, just like I did on Friday. But if it retakes 830s, you need to be aware, because it went from over 100 million shares to only 7 million, which means that it could skip up on a couple 100,000 shares back over 8 on Monday, in which case you could start to see that kind of domino effect on covers. SPCB, higher the better. This is exactly what we were talking about. You can see this line. I drew these all out pre-market. Anybody that is in the room, make sure you go back and read or watch the broadcast. We do it every single morning at 8:50 a.m. Fridays was awesome, and this just happened to be a perfect example. But I was going over the warnings of where it could go, why you should wait till open, all that kind of stuff. I think it's good to hear. But fantastic trade. Not only that, but you had this stuff right into VWAP right before the open. So that's another thing that we look for. Let it flush, come back, confirm at VWAP, and then unwind. So pretty clean, pretty nice opportunity. It even gave that nice opportunity off the open where it stuffed and came right back in. So higher the better. I think it's safe to say that a lot of people are stuck on this thing. Pretty much the prior close is line there, this 225 level. I want to be watching. And so basically, if it could ramp 220 to 240s in this range, I'm interested in a potential failed follow through. I want to make sure that I'm not emotionally attached, to a short, because if I short too low, 220, 210, I'm going to be covering at 240s. So I want it to push into the 220, 240 level, fail to follow through. So exhaust people out, come in, fail, come in, lower high, and then I'm interested in the potential of just slow, steady fade back down. Good volume, but I do think we could squeeze out a few that held it over. It just seems to be the case lately where people are finally getting patient again with the shorts, and then all of a sudden it gaps up 20, 30 cents. It wasn't part of their plan, and it gives us an opportunity for the fade. So we'll see what happens. Ideal world, 230, 250 blow off, and sit back. WKEY, I think this is going to probably be, it's probably just going to fade off to nothing. I could be absolutely proven wrong right away if NFTs stay hot and if this thing starts to base. But just knowing the history of this thing, knowing that this thing never holds trend, yes, this is the first time it's had actual real volume, but I still do think overall it's a pretty sketchy move by them to put out a PR that fast, and I think that it was for a purpose of creating liquidity for either the company or somebody, whatever it may be. So be cautious, but watch pops. If I were to kind of look at levels that I would be interested in, pops versus probably this area of support, which has become resistance. So I always kind of look left. You can see that this level over here was the base. It's now the top, and now it's fading off. So that's sort of the level that I'd be looking for a potential starting point, which, as you can see, it kind of lines up a little bit with almost VWAP, for this part of the consolidation and this peak. So 1130s, 1150s would be ideal. We'll see. Again, it's going to depend on the sector. So if TCAT and OCG come out swinging, then I'm going to be wrong here for that idea, and it could absolutely squeeze. But if OCG and TCAT are like, 10% gap downs, 15% gap downs, this thing's going to the nines, in my opinion. ZKIN was a nice failed follow through setup for me. I would look left, and the key levels for me, basically looking at some type of 1150 to 12 kind of move, and then failed follow through momentum. I would probably use yesterday's, which in this case is Friday's VWAP level, which is this yellow line, as sort of my risk over and under that level. Never a hard stop, but does it go up there and start to form a new trend and start to go higher, then I probably want to move on. Last but not least on the failed follow through is HOFV. HOFV. This one kind of came out of left field. I think it caught a lot of shorts off guard. Usually doesn't hold trend. They had raised a bunch of money, but the demand was just too crazy. They caught the NFT craze, which it made so much sense. This is the Hall of Fame, and it just turned into this could be amazing if they went into the NFT. And they did come out with comments that they were, kind of looking into it, but that doesn't mean anything, obviously. But the ability to kind of think and explore the potential, people got excited about it, as you can see. I got long on that headline that I posted when they came out with that, and I made it a good part of the way up to this point over here. And just like I said in the room, if you're in account building mode, consider locking in. Sure, patience paid off, but had it died over here, you would have been happy with the exit. So overall, good stuff. Traded it into the after hours as well. We had a little bit of a squeeze out again. We're at a very key level. We came right back into this area right over here. Looking at the daily volume, you can see that I've added volume by price, but you can see that there's a lot of volume in this range, and we always look back. That had almost 100 million shares that day traded. So I think that it's important to always look at these key levels, look at areas where it traded and the average price that it traded prior. And I think it does give you a lot of intel as to where there could be a resistance point. That does not mean that it has to stay. So if we wake up tomorrow, which I think we potentially could, and it's 450 or 5, then that could potentially be a nice little squeeze out. I feel like there's a lot of shorts on this thing. I feel like a lot of people are on the wrong side of this thing, but I don't want to get too overly bullish or too biased. So I'm ready for either way. If I was to get long, I'd want to see 440s kind of be the base and firm up, 450s and so on and so forth. Otherwise, if it has trouble and it has failed follow through momentum, I'm going to be using 440s as sort of my guide to risk. Let's go over into the long side of things, continuation trades, and then as you guys know, I say it every time, but if you click the link, you can see all the charts and everything that I write out right there for you. But SLGG, I am looking to reposition. I have a small position left, which was a rebuy. That one in AESE. As you guys know, this is I called it like the little cousin or whatever. Basically every single time SLGG went, so did AESE. That's why I was positioned on both. Both worked out very well so far. I want to assume they're going to fail, consolidate for a couple days, but I'm still interested in the trend. Obviously, I sold the majority of the size on SLGG. Well, all the size. I just ended up rebuying some, but I would be cautious getting overly bullish. But, I be patient until 980s kind of flushes, consolidates, and we find out, does it start to base at 10, or is it going to start to, fail and fade off? So, for me, I think there's still a potential trade here. I'm going to be patient, letting it set up. I'm not as excited as I was last week, which, doesn't really mean anything. It just, I just don't have the position that I had last week. WNW, so far some good action. I've traded it the last 2 days. There was a huge move. A lot of times people play this with OCG, so I think a lot of people started to play it the prior day with OCG, and then shorts were like, yeah, no, there's no reason for this thing to go. It's not NFT type, trade, blah, blah, blah. So with that said, I think shorts might have got on the wrong side. They got squeezed out, but it's holding relatively well. I don't want to get excited about it until 14 start to form a base. I do have a position. I am letting it work. Like I said, I've traded the past 2 days. So I've sold the ramps around a core. If it fails and it starts to stay heavy at 13, I'm not overholding because this will go right back to 11. If it starts to firm up at 14, I think it has potential for, some fun. AACG, you guys know I've been in this one for a while. Basically low mid fours and just kind of have been letting it work. Finally got back over fives. So if we get a nice either a PR or some type of breakout over 6, it could easily go to 8 fast. And that's kind of why I was interested in it. But I'll be locking in along the way. I'm not looking to trade this to 20 again, like you saw it did in the past. But that was a fun day, and that's also why I was interested in this trade the last couple of weeks. ZTHR, another chart that I had given last week that I like. Overall, no position there. BGI, I have a decent stake in this. You guys know I've talked about this for a while, for about a month and a half now. So, I'm still there, sitting on about a double, a little bit more, but, I'm going to give it a chance. I mean, yeah, looking back, it would have been nice to sell it into this ramp and buy it back. But to me, I just don't think I'll rebuy the amount that I have if I end up selling it off and then trying to, rebuy at a lower price. PDSB, nice setup. I'd be looking for some type of breakout versus 5s. It's starting to set up well. It had this volume. It's been consolidating since. I don't think this is going to be just a momentum trade. I'm just thinking kind of big picture if we start to base and continue to base at the 5, which it's been doing. Job, nice setup. Odd kind of rebound off this flush. So I'd be watching it if it starts to base over those, the 190s, 2s. We could have a nice little low volume kind of sprinter. No position for me. Low volume, cautious. Same thing. AINC. Low volume, cautious. But I'm in this one. Bought it a couple days ago. But, small position. You can see why. We always talk about these charts. The big position candle, consolidation, and it starts to break out. So then that's when I start to get interested. It's hard to size into this thing because it literally trades 100,000 shares a day. So it's nothing I'm excited about, but I could get excited if it starts to break out and hold over, this prior high, which was 1140s. Then, all of a sudden we might turn into a nice opportunity. Last but not least, FINB. This had a huge breakout day a little while ago. We're very close to either a nice continuation pattern where, maybe we get back up to 9, 10, 11, or we have a little gap up day and it just stuffs, fails, and pulls back a buck or two. So I want to be prepared for both. I feel like we're very close to a potential $1 to $2 move. And, I'm not calling shots on which way I think it's going to go. So far, it's got a nice little continuation setup. You want to assume that 9 is going to be the top. If we start to see a trend and breaks and holds 9, I think we could have a nice little breakout. Again, if we go and open at 9, we get stuck, I think we could see a nice little fade. But I do think we're going to have a buck or two opportunity soon. I'm going to wait for it to tell me which way it wants to go. And that's about it. I've got a couple others that you can check out. Those are the staying familiar. Click through to the website on the description. If you have any questions, as always, reach out. If you want any of the apparel, you guys buy it, we donate. Link is also in the description. And like I said, if you guys are interested in coming on board with Investors Underground, we have a sale now. Link is in the description. We'll see you in the room tomorrow. Have a good weekend.